The fixed income world had just stopped dead.
And all the banks were just going, everything was going straight down, and it was just so overwhelming.
And I yelled at Danny he wasn't having a panic attack.
Right. Yeah. And we ended up on the steps of St. Patrick's
So you told me that you went to
Yes.
St. Patrick's. You said we're on the steps of St. Patrick's Cathedral. I was with Bill Hebel, said to the investors at the table, excuse me, I have to leave. And I just walked out.
You came and met us.
And I went and met you guys at the steps of St. Patrick's Cathedral. We were all sitting, and I think I turned to you, Vinny, and I said, these poor people, they have absolutely no idea what's about to happen to them.
You turned to the Catholic on the top of St.
Well, St. Patrick's. Hi, I'm Steve Eisman, and welcome to my podcast, The Eisman Playbook. In my 35 years of experience of investing in markets, I've seen many ups and downs. You might know me because I was depicted in the book The Big Short by Michael Lewis and portrayed by Steve Carell in the movie of the same name. In this podcast, we are going to explore and analyze market trends, companies, and subsectors through various guests in and around the financial world. My goal here is simple, to educate. So come and join me as I share with you the Eisman Playbook. Hi, this is Steve Eisman, and welcome to the Eisman Playbook. So today I have some very, very special guests. My former partners from my hedge fund days at FrontPoint. The four of us were all portrayed in the movie The Big Short. So let me introduce first Danny Moses. Say hello, Danny.
Great to be here, Steve. Thank you. Congratulations on this.
Thank you. Porter Collins. Say hello, Porter.
Good to see you, Steve.
And Vincent Daniel. Say hello, Vincent.
Hello, Steve.
So I had this whole script.
Hello.
I had this whole script that we were to start out. We were going to talk about how we met, the movie. Hopefully, we'll get to that. But anything going on in the market these days?
You know, feels like a bear market again.
It certainly does. So let me set the stage. So this podcast is being recorded Friday, April 4th, just as the market opened. Market's down around 2% or change. On Wednesday, President Trump, as I'm sure all of you know, announced a whole series of extremely draconian tariffs all over the globe. And Thursday morning, the market had a very, very bad day. The market was down basically 5% across the board. NASDAQ was down almost 6%. So I think we should talk about that first. Danny, give me your preliminary thoughts about this.
Well, one is that the math that the tariffs that they used to get to the numbers didn't make sense, right? And it's funny enough that the quantitative models or whatever that was used is ChatGPT or whatever it might have been that took the trade deficit and divided it by how many goods the other countries purchase, and the math doesn't work. So start with the fact that it's shock and awe, the incrementals and how it was calculated. And we were joking yesterday, not joking, about what is Nike, how their conference calls went yesterday morning about how we're going to reshore from Vietnam all of our shoes. So my feeling is this: you can't just undo a generation of outsourcing and think it's not going to be fixed overnight. So the shock and awe of everything they've done to me as far as Doge goes and the government and just ransacking, let's just cut expenses, and then let's bring jobs back. There's a lot of pain that's going to happen between now and then, and I firmly believe that they're going to walk these back. One, because the numbers didn't come from anything that was logical. So I know Trump's saying, I don't care, or I'm going to stick with this policy, but the fact that Scott Bessent didn't even know what the numbers were going to be, the Treasury Secretary, scares the shit out of me. So,
Porter?
Well, as you know, all of us go from zero to bear very quickly.
I hadn't noticed, but okay.
Quicker than a Tesla.
So just like we were walking over here, we only notice bearish things, right? So, you know, we probably weren't the best guys to catch the last 15 years of a bull market in technology stocks. That wasn't our really forte. This, we're better at. You know, I think it's incredibly disruptive of what's going on. And I understand the premise of what he's trying to do, but it's too fast, too soon, too much shock and awe, and too disruptive to companies who think on, you know, scales of 10 years or longer, or supply. Nike's been, you know, to think a company like Nike can adjust its supply chains after 30 years of, you know, perfecting, you know, lowering costs, all this stuff, type of stuff, with a stroke of a pen and executive order, like they have to redo everything. I just think it's incredibly disruptive to corporate America. And so therefore, it's disruptive to the S&P. And the multiple's probably too high. It was high anyway. Nike before the trade tariffs was trading at 30. I'm not short Nike, but it was trading at 30 times earnings. Like what in what world was that the right multiple anyway? So we're going from a stock that probably should be, I don't know, in disruptive times. What does it trade to? 15 times lower number. Stock should be cut in half again. And so I don't know. I think it's all of it's very negative. We own none of the stocks that look like that. We own stocks that are sort of own individual stories. That's what we've always done, right? We've always try to find little gems, and these little gems go down and get smoked in a small caps.
Because nobody's ever heard of them.
No. So, as a value, finder, it's difficult. But, I think during a bear market, which I think we're in, I think you have to hold on to your ass and come out the other side and say, hey, there's a lot of good stuff, a lot of good companies, a lot of things I can buy, and take the optimistic approach. But buying every dip like what the retail did yesterday. Someone told me that yesterday was the largest single buying of retail in the history.
Retail investors, not retail stocks, right?
Yeah.
No, that supposedly happened at the end of the day or throughout the day.
Throughout the day, but I don't know how that's measured.
They were buying the dip.
Really interesting.
Well, that shocked me.
Maybe they all voted for Trump.
I just think these kids are younger than we are, and they're used.
But everybody's younger than we are at this point.
But like they haven't seen it. They haven't seen a bear market. We were telling the story about this old timer that I went to dinner with in like 2008, and he's like, I was at Sanford C. Bernstein in 1974, and I covered PepsiCo. And I said, I stood up in front of the sales force and said, PepsiCo can go no lower than $20. You know where it went? It went to 5. You know why? Because it was a bear market. And we always joking when a stock goes to 5, it went to 5. So things can go a lot lower than you think it can, and so. I just think you have to reorient your brain around, instead of buying all these dips, being careful. I don't know. I better be careful around this.
Prior to getting Vinny's thoughts, I want to just say one other thing. No, I want to say one other thing, which is the obsession with the 10-year yield, which everyone has decided that that's the be-all, end-all, which could be the reason
that's where I was
retail
going.
started. Right. That, to me, is nonsensical right now, because if the economy slows down, it's not going to spur new demand in this type of environment. I want to say one other thing. If these tariffs stay in place, we're going to 5. I mean, this S&P is going to go a lot lower. Vinny, please. Sorry, I had to throw it.
Vincent, your turn.
Yeah. Thank you. No, the only thing I was going to add is let's think about it strategically or strategery, right? Yeah. As to what they are thinking about. Obviously, the onshoring and the like, but there's another issue at hand, right? Which is, given where we are in terms of the deficit, Steve, I'm sorry, but the deficit.
I think Steve in the show will go, guys, you were right about the deficit.
No,
I was wrong.
I will not say that. We will not say that. But anyway, I'll say it anyway. They needed to get the 10-year Treasury down. They needed to. So how do you do it, right? You have $9 trillion of debt rolling over. They made fun of the fact that Janet Yellen was just issuing T-bills instead of long-duration bonds. And the minute Besson gets in the seat, he goes, maybe she was right to do that. I can't do it either. So how do you get it down? Well, there are a myriad of ways. QE is being one, which is printing money and the like. But the other way to do it is, and I think, Porter, you're a history major, right?
Yeah.
And Lord knows, Steve knows history. There are two prior economic patterns where they put us into a recession very quickly. One was during early 80s with Reagan and Volcker, and one was, I call it the Jim Grant recession of the early 1920s, which was an extremely quick, violent recession where you had massive deflation and got us out of our,
1920s?
Early 1920s.
Oh, the early
1920s.
Okay.
So I think
you don't want to talk about the Great Depression?
No.
He doesn't want to go there.
I don't want to go there. No, but so I think part of this is, and they wanted to get oil prices down. So drill, baby, drill was not going to work in my opinion.
So they got the Saudis to pump.
So they got the Saudis to pump and a recession, which is going to knock oil down. So in some instances, Danny, don't yell at me. And I'm not saying it's bullish. I'm not saying it's bullish. I'm just saying two of the things they needed to get down, which is yields and oil, they did. Now, getting out of this mess, right, that he's created is a whole different other matter.
Danny yells at us when we get bullish.
It's not,
but 2 days doesn't make a market up, down, sideways, and 10-year yields could go back up because of
correct
term
All
premium.
right, so I'm going to make some predictions about
Please.
what
Let's
I think is
hear
going
it.
to happen.
Nice.
Okay. So first of all, if you are of the view, like Trump, that trade is unfair, so let's just accept that that's the case, because that's his view. You could agree with it or disagree with it, but he's president and we're not.
Right.
How do you get things to change? So the only thing, you're not going to get things to change by negotiating, just sitting at a table and say, please lower your trade barriers, because nothing will happen. So what he has done is create, now I would agree that the math doesn't make sense, but it doesn't have to make sense, because if your goal is to reduce trade barriers all over the world so that the U.S. can export more and to reshore, then you have to do something very dramatic. And President Trump loves to do things very dramatically. So he's created a tariff world that is so draconian that that the way I think this is going to work is, first, we're seeing it today. China retaliated. You're going to see other people retaliate as well. But who's in the best position to weather this storm? It's going to be a storm regardless. But the U.S. is in by far the best position. The percentage of GDP of the U.S. from exports is 11%. China officially is 20%, but it's much, much higher than that because they sell a lot of stuff through Vietnam, et cetera. So it's probably at least 30%. Europe is all over 30%, with the exception of Germany, which is over 40%. Canada and Mexico are 35% each, with, of that 35%, 25 points is exports just to the U.S. So what I think is going to happen is you're going to see retaliation. That'll last about a month. And then where the pedal's going to hit the metal is people are going to come to the table and see what they can work out. And if they work something out, we'll all be fine. If they don't work something out, we'll have a trade war, and we're going right into a global recession.
But those are U.S. companies that are in those countries that are exporting back to the U.S. effectively. So when we talk, right, but we're a services-based economy, and not, to your point, not a goods-based economy as much. So services, I'm concerned that this America First policy and all these policies from a trustworthy partnership with the rest of the world has been damaged. The fabric's been torn. Call it whatever multiple you want on the S&P to come off. And I don't know after this, I do believe they'll all come to the table and maybe something positive could happen along with a lot of pain between here and there.
There has to be pain.
Right.
The only way you're going to get people to
negotiate. Didn't have to do this.
I don't agree with that. I think if your goal is his goal, this was your only move.
Porter had a great call yesterday. Basically said this is Brexit. Feels like Brexit. Imagine what was going on in the UK at the
On a
moment,
global scale.
On a global scale. And he's right. That's what it feels like, because we traded Brexit in 2016 together, and we were caught, I would say caught off guard. We were caught that it actually went through the way that it went through and the things that were attached to it. You had to rethink.
We weren't, our stocks got killed. Like we had
Ireland,
we were along some Irish stocks, and they got killed.
Yeah.
And like it ended up being good for them, or not bad for them, and they got killed.
Which was our initial thought, but they got killed initially.
Yeah. And so goes back to Steve. It sounds lovely. It's a lovely dissertation. I actually enjoyed it.
It is a good dissertation.
Overruled.
Steve, remember the scene in Spies Like Us at the end where Emmett Fitzhume, Chevy Chase is sitting outside like, what's going on in there? We're negotiating. And they walk in, they're playing Trivial Pursuit. The girl's on his lap, and they're just dividing up the world. That's how they came up with these tariffs. Like, all right, guys, what are you doing? I don't know. Next question. Like, seriously. Yeah.
From a market's perspective, they're going to kill this thing. They're going to kill it.
Hunt for Red October.
You're gonna have you told me they're going to have a month of uncertainty? Like, the market, they're going to freak
This will be over
out.
in 2 minutes.
No. So China retaliated today. Mexico and Canada are not going to retaliate because
in a month.
because
they have
no additional tariffs were put on them from Wednesday,
Yeah.
which was a little surprising. But Europe will retaliate, and then we'll see. So,
But the real story is
uncertainty
China.
The real story is China. As far as Trump is concerned, every U.S. company should just get the hell out of China. That's what he wants. He wants Apple to completely get out of China. He wants Nike to get completely out of China. He's not interested in negotiating with China.
How about Tesla to get completely out of China?
No, they're okay.
They manufacture there, but that's not my problem. I don't own Teslas. It's not my problem. I got other. Believe me, in my portfolio, I got a lot. If you looked at my portfolio, you'd say one word: problem.
Oi.
Oi. Exactly.
Pogrom.
Pogrom.
Not yet. It will be a pogrom.
Oh, yeah, it's coming.
It's
Those
coming.
were funny times on the desk.
Oh, yeah, lots.
I'd
Really
have to
fun.
go, Danny, what is that? Yiddish? I go, all right, we good. Run. Right.
So let's imagine we were all still together. We were coming early in the morning. It's 8:30. We have our morning meeting, and it was this morning. Danny, what do you think we would have said?
Well, let me set the scene here. Danny's hair is on freaking fire
Right, at that moment.
because he's now max bearish because the world is ending.
Well, so one of my friends once said to me, how do you trade the end of the world? You don't. You can't trade it. So ironically, right now, I'd be covering things. I'd be buying quality. And I wouldn't be shorting into this because if this really does continue, so we're sitting here on Friday morning, Monday will be a crash in the market without any, as we see here today, I can say if nothing pulls back today,
Danny Moses
nothing
predicting
changes,
a crash Monday morning.
If nothing changes between now and then on any negotiating, we're going to have that day on Monday because it'll build up over the weekend.
There will be retaliation over the weekend from Europe, I think.
Well, then I'm saying, I'm not saying retaliation. I'm saying
China was, again, I will say China was the biggest part of the retaliation.
But you know what you do? So I'll
agree.
answer. So this would be your decision, Steve. That we taking the gross down.
I would tell you I don't want.
No, you would take the gross
You
down.
make the decision.
No, but if we were
Yeah, no, we
saying
would take
we
the
were back
gross
in our
down.
desk, we're back in our desk, and you're the portfolio manager, I'm the trader, and my recommendation would be let's just take the gross down both sides of the book, long and short, and wait for a
So de-risk.
de-risk
Just
the
de-risk
book,
and
yes.
sit and wait.
Yes, I don't think you
This
press.
is the most bearish conversation we've had in a long time.
No, but I'm not being bearish.
For sure.
No, I know, but like this is like
We haven't had a conversation like this in 10 years.
No.
Correct.
Not
But I
10
remember the
years.
days.
More.
More.
Yeah.
The only time you got a chance to have this conversation was COVID, and that lasted
Yes.
2 weeks.
Right.
And Civ B, you didn't even get a chance to have the conversation because
For those who don't know, Civ B is Silicon Valley Bank.
I apologize. And because
You gotta know who you're talking to
they
here.
cured it.
Okay.
They cured it over a weekend.
Printing money, yeah.
Printing money. And right now, they're not printing money. So this, see, to me, I think this is sort of a news flow, news release market, which gets really annoying.
Well, because you can't model it. There's no modeling. You can't say,
you can't model it. And number two, there is no other variable that matters. Like you could do any work you want on a company, but all that's if you take your fundamental research and throw it out the window.
But even this gets difficult. The only thing that seems, I always try to go, what's probable through all of this, right? And what seems probable, and I said it before, is that 10-year Treasury seems to need to go down further.
Okay.
So then you could say, okay, or is there anything that I would own based upon that?
So housing related stuff.
Housing related,
Home builders, mortgage
right,
companies.
but other than that, but then again,
But it could reverse tomorrow.
up 3%.
Right.
That's
You know what
the
this
difficult
reminds
part.
me of? This reminds me of the fall of 2008, which is probably the most stressful point in our lives.
Oh, without
Lehman
question.
going under over the weekend.
That was fine because we were short, right?
But that got to a point where like, where does this stop?
Well, yeah, I understand that, but the short band was the most.
So I want to tell that story
Okay.
because on that, so
We all have different.
We all have different
We're going
versions.
to talk
Yeah.
about that. So Sunday was Lehman Day. That was
Correct.
September 14th, 2008. So I remember I was with my kids and I was just scrolling and I turned to my wife Valerie and said, I got to go to the office because they would open the markets for a little bit. So I went to the office. I was the only one there and I didn't do any trading. I just watched the world collapse and then I went home. So Monday things were okay. Tuesday night, I remember I was at dinner and it came across. We had Blackberries.
Yes.
I had that AIG was in trouble, and I said, "Okay, that's it. It's over." And then things were really bad for a couple of days, and then Friday, I was at a conference, a Goldman conference, to raise money from investors, and you called me to say that Danny was having an anxiety attack.
Panic attack.
Panic attack. And you were having a panic attack because you were looking at your screen and you were seeing basically the fixed income world had just stopped dead. Which
and all
happened.
the banks were just going, everything was going straight down, and it was just so overwhelming.
And I yelled at Danny he wasn't having a panic attack.
Right. Yeah. And we ended up on the steps of St. Patrick's
So you called me, you said you went to
Yes.
St. Patrick's, you said we're on the steps of St. Patrick's Cathedral. I was with Bill Hebel, and I said to the investors at the table, excuse me, I have to leave. And I just walked out.
You came and met us.
And I went and met you guys at the steps of St. Patrick's Cathedral. We were all sitting, and we were just sitting there. And I think I turned to you, Vinny, and I said, these poor people, they have absolutely no idea
Of
what's
course
about
you
to
turned to the
happen.
Catholic. You turned to the Catholic. I'm
Well, on St. Patrick's.
Yeah.
So, first off, there is, if you can find it, a reenactment of Danny's panic attack. It was one of the takes that didn't make it on
Into
the Big
the movie?
Short. But
That was my take.
yes, both of
You were
both of
not in Brown acting school, it appeared.
No.
Yeah.
Nor were you at Emory acting school.
No, but I do remember like taking the train home and looking at people and saying, "You poor people." Like you.
No idea.
No idea.
No idea.
I remember sitting on those steps and like they're going to close the banks.
Right.
They're gonna stop them because there's a run on the banks.
And right then, Paulson banned short selling of
Yes.
financial
Yes.
stocks. Right then, we all ran back to the office.
Yep. It was at that moment.
And we got absolutely we were short everything.
We got roasted.
Roasted. That was
We
the
were
worst day.
We're so prepared for the end of the world, and it was.
We lost 10% the month.
And I missed a wedding that night.
Yeah,
Yes, you did.
I was supposed to go to a wedding.
I felt like the scene in Godfather 3 where Al Pacino says, "Just when I'm out, they pull me back in."
Right.
I remember crying that evening. I was like, "What the hell?" Like I was like, "We're done."
I actually-
they're gonna kill us.
actually-
We weren't done.
It was like an out-of-body thing. It wasn't even our portfolio. I didn't think things would ever get as bad. I don't think we had any idea the amount of leverage and derivatives that were in the system. We knew stuff was out there and it was bad, but we assumed companies themselves, with the exception of Lehman, we knew as well over their skis, things would be okay, or the government had to have some sense for. But when it became like there's no end to this, where does this thing stop and start? That's when I got nervous for all humanity.
So you know
Not
what
to
our
be
mistake
dramatic.
was that year?
Yeah.
I remember this so clear. Our mistake that in 2008, our intellectual mistake, is we all thought that surely the government knows what we know. And if the government knows what we know, they must be doing things behind the scenes to stave off this collapse. And what we learned, to our dismay, was they didn't know.
Nope.
And so they let it collapse.
That was the
and
great-
it feels a little bit like today.
Yep.
That was a great scene in the movie where, and I always say it to people if you do guest lectures and the like, it was like when Michael Burry said, "You know more than the chairman of the Federal Reserve," and he goes, "Yeah,
Yeah, I do.
I do," and he did.
He did.
Right.
And that might be like today.
Could be. I mean, look,
Like Trump doesn't know what he's doing. My opinion.
I disagree with that. I actually think
Well-
that this is, there's something very admirable about Trump, whether you like him or hate him or disagree with him, and that is he's the only politician that I know who actually does what he says he's going to do.
Destroy?
And he said he was going to do this.
Dave Chappelle had the greatest line. He's an honest liar.
Yeah, but he said he was going to do these tariffs, and to the extent, basically the extent of what they are, is what he promised you he was going to do, and now he's done it. And but by the way, the reason why everybody's in shock, in my view, is everybody in the market went to college, and everybody took Econ 101, and it was drummed into our heads that trade is good, and tariffs are bad. Trade is good, tariffs are bad, and we all accept that completely, and that's probably so, but the President of the United States doesn't believe in that.
Do you know how hard it is to own multiple casinos and go bankrupt? You know how hard that is? Have you been into a casino and watched people play blackjack? They're hitting on 21. They don't even know what's going on, okay? But I got you. He obviously knows what he's doing because he can own a casino and go bankrupt. But I would agree with you, Steve,
So good.
if the math made sense. So to your point you make about proving a point that the trading is unfair. Okay, trading's unfair. Proving a point that we want to bring more jobs back to the U.S. Got it. Check 2 boxes. But when the numbers actually come out, and they're so nonsensical that are based on flawed formulas, then I have a problem. Because that means exactly what you're saying, which is just to, quote, prove a point. Let's just go decimate. Companies just fixed the supply chain after COVID. What has carried this economy has been services since COVID. We are damaging the services side of the business, the tourism side of the business, all the stuff, because foreigners are like, F you. We're not going to support your policies, your country. So I don't know. I think it's a.
Where I think that probably the three of us would disagree with you, Steve, is that I understand that he thinks he knows what he's doing, but what we know more than he does, or at least I think we know more than he does, is that he's going to kill the stock market. Going to kill it.
Just about they're going to get their tax cuts in.
But first off, Danny, are you surprised that President Trump and Elon Musk are using fake numbers to get their point across?
No.
Okay.
Right.
That's one. Two.
Should not be shocked.
Well, I'm not shocked.
I'm disappointed.
I was like, wow, that's some bad math. I didn't think you'd go that far, but God bless you. The thing
Explain what you mean by bad math.
Well, that's what Danny was talking about.
Well, basically, what they did was take the ratio they came up to say that Europe is charging us, I'm forgetting the numbers, like 36% tariff rates. It wasn't their charging.
The actual tariffs plus all the VAT and all the other stuff.
No, they took a trade deficit divided by the imports.
Vietnam is a better example because Nike shoes are made in Vietnam.
Right.
They're exported back to the U.S.
Right.
Vietnam doesn't buy as much as we buy from them, obviously. So we're going to run a negative trade balance with Vietnam because they can't. So we took the ratio of that negative trade balance, and multiple hundreds of billions of dollars, and divided it by how much Vietnam buys from us. Took that ratio, so it comes out to be what was Vietnam's number? 90-something. I don't know what the number was. Some percent.
Then he cut it in half.
Right, and I'm like, what?
Well, that's good math.
Well, the math, right? That part divided.
The math is good. The logic was
anyway. The logic was flawed. So there's no.
It's not a reciprocal tariff. I think that they have.
No, it's not a reciprocal tariff.
But the U.S. consumers are the ones that have benefited from the outsourcing.
Well, okay, so now I'm going to press that point.
Go ahead.
Okay. So, again, back to when we all went to college.
Yep.
So, the one who made that argument the best was Clinton when he was pushing NAFTA. And he made two arguments. He said, number one, free trade NAFTA is going to improve GDP and it's going to create jobs. And he was right on the former and he was wrong on the latter. So, if you were sitting in the Midwest and you were sitting in some industrial town, you got obliterated.
Yep.
Yes.
And shame on us, the United States. We did nothing to help these people. We didn't retrain them, nothing. So if you're of the view that GDP is just a number, but a big percentage of the country got hurt by all of this. So I have great sympathy for what Trump is trying to achieve.
We all do.
We all do.
Now you may think it's going too crazy. I mean, he just went all in on the poker table. So the question is, we're gonna find out.
The real question is,
going to back down?
Did he overplay his hand? That's my concern.
No. Okay, but the problem is you're going from a peak capitalist system at peak S&P multiple.
Yes.
To a socialist system, a more socialist system.
I would call it socialist system. Mercantilist would be a better.
Okay. That is not a clean transition.
100% agree.
And so,
as Mr. T said, pain.
So could you see an S&P down 50% if like this stuff doesn't?
No, I don't see it down 50. But I could see it down. Yeah. I could see it down 25, 30%. Yeah. That's possible from the peak for sure.
We're almost.
I mean, I'm not saying it's a base case, but like if this, you can see it down 50% because GDP goes down, multiple goes down, like.
But this desperate search for. So, sorry, I have to do another movie reference, but Hunt for Red October, when the other Russian sub's trying to find Connery's sub.
Right.
And they fire the torpedo, and they put out all the anti-ballistic stuff, and torpedo goes around a rock and comes back, and he goes, "Where's the torpedo?" And he turns to him and goes, "You killed us, you arrogant ass!" And the thing blows up, their own submarine. Feels like we just fired a torpedo. Right, to try to fix something.
The only thing I say that is I hope you're wrong.
Yeah, I mean, listen, I do too, but
we'll see.
We'll see.
I mean, like I said, first you can get the retaliation. That's given. China was today. And then in a month.
What would you be doing? I have a question for you.
Yeah.
So we're sitting on the desk right now, okay? You understand history, you understand politics better than anybody. You know how to incorporate it into thought process. You'd be calling some of your people that maybe work in Washington, right, or your political buddies. You'd be calling the head strategists at all these firms. I know
Right.
you've interviewed a couple of them already to help you make sense. Do you think you would be able to piece anything together based upon that, so they'd have an answer for you that would help you on the portfolio at this moment?
And then apply it to markets.
Yeah.
That's my question.
I think the only, I think that it wouldn't matter who I spoke to. I can't predict. Like I said, I think my prediction is very good. That first it's retaliation, and then people come to the table. But it's going to be at least like a month.
Well, you have to halt you can't impose these things. They have to come off during that month. You can't, because
No. They're going to stay on. The tariffs are going to stay on, and the only question is, when are people going to come to the table, and who's going to back down? That's all that matters. But between now and then, I would have de-risked the
That's
portfolio.
an extremely volatile market.
Yes.
Totally. That's why
Extremely.
you'd have to de-risk. You'd have to take both longs and shorts, and you couldn't press your shorts.
No.
Because you press your shorts, and that'd be, like, let's say on Monday, Trump comes out and says
Short ban on Tesla.
No, more realistically, he would say something
That's realistic.
that sounded
Progress.
I'm willing to negotiate. I'm getting.
That's what I'm
nice
saying. That has to
conversation."
happen.
And you
Had a great phone call with
had a
G.
great had a great phone call with anybody.
Right.
And your shorts would rip
Oh,
your
by
face off.
the way, Howard Lutnick's no longer with us. That's his other famous thing that he does. He just off ramps on people. He's like, I don't even know who is
that?
Howard Lutnick. I don't even know who that is.
All right, I think we've beaten this to death.
But I want to say one other thing. And
Let's
this
go.
Is probably
Keep
not,
going, Danny.
This is probably not
Hop it again.
for the audience, and I'll try to make this as simple as I can. I want to say this again about treasuries yields versus credit spreads. And the reason I want to say
So
that
for the audience, explain
Yeah.
what credit spreads are, because not everybody
basically
knows
the
that.
willingness, so you have a large pool of investors and institutions that will buy loans that are securitized by Wall Street that are
Not
auto
treasuries.
not treasuries that are auto, that are mortgage, credit card receivables, things like this. The required rate of return based upon what's happening in the economy and the market at the same time treasuries are going down expands, meaning credit spreads are widening. It's such a financialized economy. It has been since 2008, since the bailout. We transferred the risk from corporate balance sheets to the government balance sheet, right? But what makes this economy function are credit spreads being tight, and they're widening dramatically.
So that's the spread between non-treasury
between
debt
risk-free
yields.
and risk,
Right.
basically. And so
risk is getting worse.
Right. So if you look at the HYG, there's other things you can look at that I'm not going to bother them with it, but I just want people to understand that it creates a backup in the system. So similar to the mortgage crisis, the first thing that happened was we saw firsthand, we were short all the stocks. Companies themselves were originating mortgages, gain on sale, what they can sell those mortgages back to Wall Street for, and they can bundle them and sell them. We hit a point of inflection where the cost to produce those mortgages was higher than what they could sell them for. We knew the game was over. What happened next? Wall Street pulled the credit lines from all of these mortgage companies when they realized they didn't have anywhere to sell them. I'm not saying that's happening because, like I said, the risk is not on the bank's balance sheet. I just want people to understand the plumbing underneath what's going on in the system. It's not just about stock market prices, and it's not just about treasury yields. It's the functioning of a product being processed through the economy. I think it's worth mentioning.
And as long as we're beating dead horses here, just think about how our bearish brains go, right? So one of the things that we talk about is that companies have optimized or perfected supply chains, right? So Nike's optimizing, but what they also did over the past
40 years.
40 years is optimized balance sheet. So optimal debt levels, so you get the optimal return on equity, right? But if you take a company like CVS, the drugstore, they optimized for a normal environment. Well, their sales have gone 45 degrees ski slope downwards, and now you've optimized the debt for revenues, 2 years ago. And in this world where you optimize debt and your revenues go down, like they're going to because of tariffs, you're in trouble. And the equity, is at the bottom of the capital structure. And so that's why, you can get a move in the markets much greater than people think. And that's what, if I'm thinking bearish, and this is
what we do.
That's what we do. That's what the risk would be. That I didn't think about that.
Well, we haven't had, I remember in 2007, we started to learn things that we thought we knew everything.
We didn't.
And we found out we don't know everything.
Yeah, no,
so I remember, like, I got a phone call from I forget, a friend, and he said, "What's a sieve?"
Right.
And I'm like, "I don't know, but I'll get back to you." and that turned out to be an important thing as part of the crisis. What we have not seen yet is the stuff that we don't know.
Right,
Correct. We know
balance
the
sheet.
tariffs.
We were
know
saying
the
that
impact
yet.
on the economy. We know that's bad. We saw the stock market go down. What we haven't seen is a swan.
Leverage is lurking somewhere. Yeah. We know that.
Somewhere.
And we will find
Well, leverage loans are not
nobody has broken yet.
Yeah.
No.
The market's down. That's it.
I said that yesterday. Danny yelled at me. It's only
Why
been a
would he
day.
yell at you?
It's only been a day, right?
Well, funds are getting carried. You'll hear about funds.
No,
being
but
shut
we're
down.
talking about the.
I'm not talking about like some hedge fund
No, I
being
understand.
liquidated. I'm talking about somebody important
Yeah.
Steve,
has something we know nothing about.
Yeah.
Steve, there are certain hedge funds that if they got liquidated would be important,
That's fair.
right?
I mean, but you know, places like Millennium are just taking
Well,
numbers down like crazy.
what are Goldman Sachs and Morgan Stanley doing right now? They're telling their prime brokerage group, they're telling their risk group, what are we exposed to? What's going on? What firms have leverage? Take it down. They're sending out. That's the tap. That's what
how
you're
the
seeing right
prime
now.
says, yeah.
And within that, there are product categories. We know how things go. And I'm not saying there's a long-term capital necessarily out there. Long-term capital, had Nobel Prize winners and Black Scholes were running around into their offices and built the perfect model until it wasn't. And it's always leverage. To your point,
Always
it's the
leverage.
leverage that brings you down, nothing else. Because you can unwind anything without leverage, because all you can lose is what you have.
Right.
But who's holding the leverage? Who's lending against it? Those are the things that you're talking about.
So when the whole adage of when the tide goes out, you can see who's
naked.
Yeah.
All right. Like I think a good example of that in today's environment. I hate to always go back to it, but Tesla sales were getting killed. And what does Trump do? He rolled out and said, "I'm buying a Tesla. Everyone should buy." And like all the MAGA people were like, "Let's buy a Tesla." Well, they were doing that because Elon's like, "Well, I know I'm helping you with Doge, but my sales are down."
Duke and Duke.
Duke and Duke. My sales are getting killed.
Yeah.
Right? And so I can only take this for so long.
Right. All right, everybody take a deep breath.
Yeah.
breath.
That
Yeah,
was good.
that was very good.
That was good.
We had to go bearish.
We
though.
had to talk about what's going on. Everybody take a deep breath. Everybody relax.
All right.
All right, let's go back in time.
Okay.
We're reminiscing. All right. So, Danny, I think I knew you first.
Correct.
How did we meet?
1996, Oppenheimer Institutional Equity Sales. You were the financial analyst, so I got to go back in the rooms and meet with the tech analyst, the bank analyst, especially finance
What were you doing
analyst.
before that?
Before that, I had just gotten my MBA at Emory, but before that, I was at MBIA, Municipal Bond Investors, and I was a muni bond analyst covering airports and colleges.
I didn't remember
up in
that.
Armonk. So I wasn't on the MBIA side where they blew up on the derivative side, which was ironic. But I was there for Orange County in 1994 when the county treasurer was using derivatives with Merrill Lynch, and they convinced him, you want to enhance your return, to go do the swap trade on
Let me
rates.
show you a trade.
Right. And then so they called us all into a room in 94. David Elliott, I remember the CEO of MBA, was like, don't worry, it's going to be fine. MBIA insured, they created AAA ratings for normal single A's, so they would pay a premium. It's an insurance company. You would go out and you would provide insurance, and it would MBA's balance sheet can now survive anything that would default. Well, if Orange County went under, MBA would not have the capital. So anyway, that was my first kind of crisis, and then so I met you in '96, and Vincent shortly after. He was working for you with Meredith. But I remember specifically, and I had to cover hedge funds, and so it was institutional equity sales, same as a retail broker, except instead of covering individuals, you cover hedge funds. So I would have to pick. So
your clients were hedge funds.
Your clients were hedge funds and some pension funds and state planning, and you could bring up on Bloomberg the holdings of what they had. It was every quarter you would file with there would be 60-day delay, but I could see what they had. So a couple of them owned some of the stocks that you covered, and you got up during the first subprime crisis, like Ames Financial, okay, like Ugly Duckling.
Ugly Duckling. So
Duckling.
I bought some of the things that I covered was subprime mortgage and subprime auto.
Right,
Yes.
and there was a couple that showed up on these
sector.
screens, so I would have to call. So you got up, I don't remember the exact month, it was, I'm going to say late 98, early 99, because Vinny was, and you got up, so each morning, the research analysts, for those people that don't know, come out to the BEMA, and they speak and they talk about their stocks. It could be an earnings report. It could be I just visited management. You got up and you literally said, the following 5 stocks are going to zero. And I turned to Barry Karetnik, who I learned from, who's a salesman. I go, that seems like a tough call to make to some of the clients that have this portfolio. He goes, yeah, do me a favor, call mine for me. So goes, Steve, come over here. So we pulled you off the thing, and Vinny and Meredith were doing the work on the Moody's. You were already looking at pools like Moody's and S&P. You could see the credit deteriorating.
We were like the first people on the equity side to actually look at securitization, credit quality data that came out from Moody's. We'll talk about that in a minute.
Yes.
And so we were using that to make a stock call. Go ahead.
Right. So anyway, so they all went to zero. Right, but to make those calls was tough. But you stood by it, and the credit, still even back in that day, the separation between research and banking. I mean, people can go look for themselves. I think the average rating on Wall Street, I'm going to say the 68 to 75% buy ratings, maybe even higher. Neutral ratings are the balance, and 1% is underweight. Like currently, even though things were supposed to be objective and change, you were always objective. Your integrity, never, and that's what's carried you to this day. So fast forward. You went to Chilton. I went to Friedman Billings. You guys met back up in 2004. Porter worked with you at Chilton. I covered you briefly there. And when you guys started Front Point in 2004, I was still at Friedman Billings. So I understood your portfolio. We were all in the same mindset already. It's almost like I was working for you then.
Right. And
then joined you guys in early 2006, and the rest is history. So
Vinny, you're
I'm next.
You after that.
I'm next. I interviewed to take a role under you as your junior analyst.
What were you wearing, Vincent?
And now I'll get to that in a second. That's going to be my story.
It wasn't a Sergio Tacchini sweatsuit.
No.
Oh, okay.
This is really funny.
Okay.
In 96.
Right, 96.
And then,
so just shortly after you started at Oppenheimer.
Yes. And you hired me about a month or two afterwards. I was an auditor, and I was trying to make the jump from doing accounting to work on Wall Street. And I thank you to this day for allowing me to do that. So I happen to be wearing a dark green olive. My wife will call it teal. Steve calls it teal. It was not teal. Suit.
An argument to this day.
An argument to this day. That suit. It's teal.
And the running joke was Steve comes up to me and goes, "You got to get new suits, son." Right? And
like Gecko? Go to my guy?
And I think I went home, right? And of course I told Christine, my wife, I go, this is an inch. I love this guy, but he's very direct sometimes, right? And one, he tells me, he goes, he didn't like my suit. And she goes, nor do I, right? She goes, well, tell him this. She goes, tell him in order for you to get new suits, you have to get paid, right? And I go, I don't think I'm going to do that, Chris. I kind of like this job, and I'll just take it and I'll get new suits. So the other thing that I remember is, so when I interviewed, my resume was Vincent Daniel. Right? Which is my name, but everyone else calls me Vinny. About 6 months in, you come into our cubicles or in the back room, and you go, Vinny, Vincent? I go, yes. He goes, you don't remind me of a Vincent. Right? I'm like, you remind me of a Vinny. He goes, does anyone ever call you Vinny? I go, everyone. and he says, well, why didn't you call yourself Vinny? I go, I didn't think Vinny was going to sell that well on Wall Street. So I said, but he goes, can I call you Vinny? I go, everyone else does, so why don't you? So that's one of the things I remember initially working with Steve on the sell side at Oppenheimer.
That was 96. And that's a long time ago.
And the first thing you made me do, one of the first things you made me do is you stuck me in front of the one Bloomberg terminal we had in the back of research way back when, and doing all the securitization pools. So for 6 months, I was getting an education on mortgage data and putting it together and accumulating it.
Porter, you were quite a couple of years later.
Yeah, this was, I want to say 2001, and I was working at Chilton as a retail and consumer analyst.
Well, hold on. You were an Olympian before that, but you can leave that out.
Whatever.
Two-time Olympian.
Steve Hires Olympian, so I just want to be clear.
It's not relevant for this conversation.
Oh, okay.
So
you don't think Steve Love going, guess what I did, Val? I hired a two-time Olympian.
I had that conversation. I bet you did.
So I'm a retail analyst and covering retail stocks, and my boss leaves and starts his own fund, and Richard goes to me, he goes, Porter, your dad's a banker, right? I go, yeah. And he goes, Steve covers financials. Why don't you go work for him? I go, okay. And so I go over to Steve, go into his office, and he's like, who are you?
I did say that.
Yeah.
You've been known to say that.
Way to make somebody feel comfortable.
And he goes, "You don't know shit about shit." And so he gives me a stack of like 20 books to read. He goes, "Read these and come back to me." And so, The Chosen, a bunch of other stuff. And so I read the books, come back, and he goes, "Okay, now you know something." And so that I then
I think I remember I took you to a conference.
Yeah.
It was a bank conference. And I stayed for like an hour, and I said, "Porter, you just stay here and listen all day."
All day. That was like my first or second day. That's right, yeah. And so, the beautiful thing of what you did for us is that we always used to say, you gave us enough rope to hang ourselves, and really, you took us to all the meetings. We'll go through the Moody's meeting. That's a good one. But you took us to meetings, and every meeting that you were in, you had us right there. And we would do a bunch of work. We'd come back and you'd yell at us for a little while, and then we'd go back and reshape things. You never liked the way any of us wrote, and so you're like, you can't write. I'll write it for you. But you were a great boss, and so it was a very happy. I mean, we talk about why we have so much laughter. Well, we were much more serious in our younger years, but I think the years of stress and everything is, we laugh and joke around a lot more than we used to. So All
right, so let's tell some more stories from our Front Point years. What do you remember most, Danny, about those times?
Well, I mean, obviously the financial crisis and being in the trenches with you guys is what I remember most of that time period. But I remember feeling vindicated with all of you guys. And I think the one thing that's lost on kind of the Big Short, and we talk about it, is that he had a portfolio already of longs, shorts, and then the CDS trade, right? The
subprime paper trade.
The subprime paper trade was just an enhancement at the time of what we were doing. And what was amazing is that, and I tell the story all the time, is that trade went in our direction on day one. Mm-hmm. And we were in a precarious position being part of a bigger fund, right, that was owned by Morgan Stanley, that we didn't want to go too far over our skis and risk the franchise. And so we didn't go as big as we could have potentially. That being said, living through that period of time, and I was the one each morning that would get the new marks that would come in, right? And this is my most vivid memory of you and us on the desk. And they were going our favor. There was a time, I think, in 2007 where things were deteriorating rapidly. New Century filed bankruptcy early in 2007, but the bonds, the CDS stopped reflecting what should have been happening. It should have been getting crushed.
So let me explain that for people. So we would get pricing
every day
on the subprime paper that we were short
every day,
but there was this did not trade on an exchange.
Correct.
So we would
over the counter.
So if we had a trade with Goldman, we would get the price from Goldman, who was on the other side of it, which was a conflict of interest.
Correct.
So go ahead.
And so I said one day, Steve goes, "How much are we up this morning in the CDS?" And I go, "It's flat." He goes, "Can't be flat." I go, "I'm telling you it's flat." He goes, "Get him on the phone." And basically what you said is, make me a market right now, because I will short every living thing. So we're calling, I go, call the broker. I'm like, "Dude, you got to make me a market." So let's say that the paper was being priced at 65 cents. Right, but we know it should probably be lower just on a relative basis.
So in other words, they would send you the price.
So we'd be up 35 points basically
from the beginning.
From the beginning, and they came back. They offered you a price of like, okay, 30 by 70. You're like, this is absurd. This is 30 by 70.
So in other words, if you want to do another trade,
you got to short it at 30 cents basically, and that's when we knew that was one of the indications that the banks were in trouble.
Do you remember Steve's line that he always gave?
What was it?
Give me a two-way.
Give me a two-way. So anyway,
forgot that.
So if I were to say from an emotional perspective, but it was the greatest, time of my life working with you guys and going through this. And unfortunately, we did well in what was a bad time for most people, but we never thought of it that way. And I think you as a detective, us as all detectives out there trying to find things, and I'll take it one step further, the for-profit colleges, yes, we wanted to short them because we knew that the models were flawed, but you were upset about what was happening to people there. And you went to Washington. Subprime goes to Washington. You do this. So what a ride. Very intense. And I didn't realize how intense it was until I stepped out of it. But those are not one memory. It's just it's a slew of things of that type of camaraderie and partnership.
Porter?
They depicted a little bit in the movie, but taking some of those trips, like when Vin and I went to Miami, Vin and I went to Phoenix. Walking around and seeing, like the housing and seeing all this stuff. We were joking around, like we went to Phoenix to a conference and see some stuff, and we went to play golf, and they were building houses on the golf courses, and we looked around and we were like, this is done. There's no one going to move into these things. Like this is, and our joke was heavy. And then we went to downtown Miami and we were looking. They were building.
There were cranes everywhere.
And I was like, well, Vinny, what's going to happen here? Like, who's going to move in? Like, this is dead. Like, this is not going to make it. Like, this is impossible.
Right.
And so like. We knew it was all going to collapse. It was very obvious to us it was all going to collapse. The thing that a bit fell in our lap was the CDS trade, but I have to say Danny did a masterful job of trading that mess because we were equity guys,
right?
And to try to figure out what the hell was going on this CDS market and what the hell, like what was a sieve and where was all this paper, and we kept finding all these little crumbs along our treasure hunt of like, oh my God, they did this. Why would they do that? And so, again, when the tide comes out, like there's a lot of bad stuff, and I think that's what's going to happen here to the same market.
Danny, what do you remember the most?
One of the things I learned the most from you, Steve, was personality goes a long way, right? Let me explain. So, I'm more of an accounting brain. You go into meetings and you're talking about the numbers and all that other stuff. It's not how you conduct a management meeting, right? and in fact, there are some times when you're into, and so you would go, and there's numerous instances where you realize that the person on the other side of the table is a human being, right? And they have a story, and you connect with them in such a very outlandish way that we would actually get a lot out of it. So one of our famous meetings was with a company that we were short, Washington Mutual, right? And Kerry Killinger was coming.
Who was the CEO?
Who was the CEO is coming into the meeting. So I'm like, wow, this is going to be hostile, right? Like we're short. We think this thing might go to zero.
And he knows we're short.
And he knows we're short.
I actually don't remember this.
Okay.
What?
I don't remember.
Oh,
this.
Really?
He's about 4 foot 11.
So he comes in and this is going to be a great meeting or horrible or whatever. And the first thing you say to him is, Kerry, looks like you need a hug. and he just starts to smile. And you give him a hug.
I hugged him.
Right.
Hugged him.
Now here we are, short the stock. Right? He knows we're short the stock.
And we joked around the whole meeting.
About what was going on. Didn't talk about numbers. Didn't talk really about anything. Well, maybe we got into numbers a little bit.
I also hugged the chairman of Moody's years later.
Yes, she did.
Years later.
So using you need a hug is really seems to work. So that's the things that I remember were the management meetings. The Japanese CEO, this is toilet paper, right?
Paper.
Why don't you tell the Moody's? The Moody's is in the movies.
So let me set the stage.
Which one are you talking about?
So the first Moody's meeting.
No, first was me and him in Orlando. Then you guys went into New York.
Correct.
But go ahead.
So
Yes.
it's May 2007.
Right.
And Moody's announces that they're downgrading subprime paper for the first time. And so they have a conference call. And after the conference call, we were subscribing to Moody's data.
Right.
And by chance, a day after the conference call, Moody's salespeople came to our office because they wanted us to buy more things than just the database.
Yep.
So we have this meeting I remember in the conference room, and it was all of us with the Moody's people, and they do their pitch, and I think I said, we're not interested in any of that, but we're short all subprime paper. And
we're short your stock.
And we're short your stock. So if anybody from the CEO of Moody's wants to sit down and talk to us about what we're thinking, we'd be happy to have that meeting.
No, you said, I think you were like, the only way I'm going to think about buying more products from you is if I get a meeting with the CEO.
Oh, I said that?
Yes.
I don't remember that.
Oh, yeah.
Oh, well, that was ballsy.
Yeah. Yeah.
Okay. So then who went to, it was you and me for
Me.
sure.
Yes.
Were you there?
Yes. No, I was not
It was
there.
just the two of
Just
us.
the two
Okay,
of
so
us.
what you tell it, what happened? And so we go to see Ray McDaniel, who's the chairman CEO of Moody's, in his office.
And it
And
was
we're short a lot of stock. We were so upset with Moody's, the way they conducted things. We're short a lot of Moody's stock.
Yes.
And so it was really a cordial meeting, right?
He's actually a very nice guy.
Yes. But then we're actually just showing him the data, his data, that we're looking at, and why are we wrong? That's basically
Why we think we're right and you're wrong.
Right. And I remember it was a great meeting, telling that, and he goes, and at the end of the day, the delinquencies are going to come down and our ratings are going to be proven accurate. And that's when we lost it, or I'll say I lost it, right? Because there was no way. And I told him, Ray,
How could you be so obtuse?
I said, Ray, quite frankly, if you believe that, you're delusional. Right?
And Vinny
He said that to the chairman of Moody's.
And Vinny
you were a nobody. We were nobodies. Nobody knew who we were.
And Vinny goes to his dark place where he gets angry
Yes.
and like stern, and that I could see him doing the
Jeremy Strong.
Yeah.
So let me finish this story. So after we had that meeting, and then the paper completely fell apart in 07. The crisis was in 08, and in 09 I had like an epiphany, which was, let's go see Ray. So I called Moody's, and they took the meeting. And what was really funny, did you come?
Yeah.
So it was the three of us.
Yeah.
And I remember we went to Moody's, which is downtown. And so normally in these situations, you go into the floor where they have conference rooms. You go in the conference room, and they call the CEO, and he eventually comes down. You sit there, you wait for the guy.
Yep.
So we go into the conference room, and they're there.
Yeah.
They're waiting for us. And I remember I walked up to Ray, and I said, Ray, you look like you could use a hug. And then I hugged him. I remember that.
The other funny story is that when we were at Chilton, we were short a lot of Ford,
Right.
because they were originating a lot of subprime paper, and
Yes.
and the data looked terrible. So you had me do all the securitization work on Ford, and it looked terrible. And we go into a meeting, and it's Richards running the meeting, because we have
The chairman, Bill Ford.
Bill Ford in the meeting, and Steve's next to Richard, and he's like like a little rabid dog ready to punch, and I'm sitting there next to Steve with the paper, and Richard's very calm, cool, collected, going through the the nice to meet you, Ford, and Steve's like, now tell me about your subprime paper. And he goes, your data, it looks like shit. And takes the piece of paper, throws it across the table to Bill. Bill Ford opens the data.
Pages.
Of it. And he's like looking, he goes, I don't even know what this is. Like, what is this? And he
I
goes,
sell cars.
Yeah, he goes, it's your data. And he goes, what data? And he goes, your subprime mortgage data or car data. And he's like, I have no idea what you're talking about.
By the way, I'll end with this. That scene in the movie, in the book, it was Steve and I in the option one. We would be going around, and Lippman did tell us, to just kind of be cool. You guys are equity guys, whatever. And it was H.R. Block owned option one, and option one was up there.
So Greg Lippman was the guy from Deutsche Bank.
Ryan Gosling played him.
Ryan Gosling.
Jared Vanette, but yes, that's him. And so we're in the meeting, and Steve's a little bit distracted, but Steve, just to your point, wants to just cut to the chase.
Yeah, he's
So
like,
the guy,
he
so
can't,
the CEO of
can't
option
contain it.
one just makes a reference. He goes, and we think that losses will be, will be no more than 5% or whatever the number was. And Steve he raises his hand. He goes, this is not a Q&A, but do you have the question? He goes, there's a 0% chance your losses will stop at 5%. Just like this. And so I'm looking around, it's me and Steve, all fixed income people, we're equity people, and I'm like this, and literally, so the guy goes, okay, thanks, whatever, and again, it's not Q&A. Maybe 1 minute later, I'm like, all right, calm down, we got through it, whatever, I don't have to tell Greg that we messed up anything. You get up, and you walk, we're in the middle of a row, you get up, I gotta go, I'll see you guys outside.
The phone rang.
Oh, the phone rang.
Valerie was on the phone.
And I'm like, you just drew attention to
The ringer was not on 1, it was on 10.
Unbelievable, but that's a true story. I mean, that could have been more accurate. Couldn't have been more accurate. So yeah, crazy times.
All right, guys.
I'm exhausted.
Me too. I'm wiped.
Yeah, that was good.
All right, that was great.
That was
Thanks,
great.
guys. I think we'll get through this, but it may be a lot of pain between now and then.
Oh, yeah.
Thanks,
All
Steve.
right.
That was
Thanks
fun.
a lot, guys.
Thank you.
That was great.
Yeah.
Thank you. Thank you so much for tuning in. For video episodes of this podcast, head over to our YouTube channel. If you're listening on a podcast platform, make sure to follow the show so you never miss a new episode. And if you got something out of today's conversation, we'd love for you to leave us a 5-star review. It helps us reach more listeners just like you. For links to our website, social media, and to sign up for our newsletter, please check out the show notes of today's episode. On that note, I'm Steve Eisman. I'll see you on our next episode. This podcast is produced by Collier Landry for Don't Touch My Radio and Steve Cohn for Next Horizon Media. Copyright Stephen Eisman, Farseer LLC.